So we're looking at data from October, but obviously it's for November at the moment. So November the 4th, we're looking towards Thanksgiving in America. Will there be more jobs created as we go forward into the end of the fourth quarter of the year? We'll have to wait and see what the job numbers will be. So I just want to introduce myself. My name is David Kinley. I'm the market analyst at Orbex. I'm going to be joined later on in the session from a very special guest speaker, Daniel. He's going to take us through more of the macroeconomic events that could affect the non-farm payrolls. And if we do get a miss on these NFP numbers, what will it mean for the economy? So let me know what you think, what you're trading on. We're going to go through the charts as well to see what is happening in that digression. So let's just go through a quick disclaimer before we get into it. So foreign exchange trading and investment in CFDs can be highly speculative and may result in losses of other profits. Foreign exchange and derivatives trading is not suitable for many members of the public, and only risk capital should be applied. This webinar is provided for information purposes only, and no information contained herein constitutes a solicitation for the purpose of the purchase or sale of any commodity, security, or investment, nor should it serve as a basis for any investment decision. Orbex does not guarantee, Orbex Limited does not guarantee the accuracy or completeness of any information and its supply. So just to be sure that it's our own analysis that we're going through at the moment. You're more than welcome to let us know what you're trading on or what you're thinking on your beliefs for the next hour as we go through for the NFP. We've got a live chat as well option open for you. So any questions that you have or any of your suggestions, feel free to bring them on board for us as well. So let's just have a quick look at what the data was from last time around and what we're expecting this time around. Don't want to bore you with too much jargon and get right into the MT4 charts as well. So this will be very, very good for us to look at together. So analysts are expecting a decrease from the last time around, only roughly about 200,000 jobs expected to be added this time around. However, before the pandemic began, 200,000 jobs every month being created was a good figure. It's a good steady figure for this economy. However, due to inflationary pressures that we've seen in America and in Europe, then the salaries haven't obviously matched those job numbers. So there are a lot of jobs still available to be filled in America. However, people are just not applying for jobs because there's simply not much point, and benefits and obviously monetary policy that America is giving out is more affordable for people to stay at home rather than go out to work. So this is a major factor that America is trying to avoid at the moment. So let's just look at the previous historical references as well, just to touch on unemployment as well. This is looking to be slightly increased in the next few or the next reading as well. It was hovering down at 3.5%, went up to 3.7% in the last few months, but is going to be around for about 3.6%. Just being asked about gold. We're going to look at gold shortly. Obviously, we've had a bounce in gold. We've had a double bottom at the moment, but we'll look at that shortly. Just want to go through a few of the figures before we jump into the charts as well. So if we're just looking at the previous readings, we had a big jump in the middle of the year. This was during the summer months, and obviously summer jobs are expected to be filled with seasonality. You've got summer and you've got the winter period. Obviously in America you have Thanksgiving, you have the Christmas period where a lot of jobs are expected to open up and to be filled. That's why January we get such a high reading on the NFP, pretty much like we saw here, 500,000 jobs, 700,000 jobs. These are during the winter months, and again during the summer months as well we get more job openings due to travel, leisure, etc. But at the moment, the last few months, it's been a very, very decreased reading. It has actually been the lowest NFP reading, the last one around since April of 2021. So quite a bad reading in that respect as well. So as I said, any questions, please let us know. We're going to go into gold shortly. Just want to go through a few slides just to get us in the mood for the NFP. So just looking at weekly jobless claims as well, this is very important as a big standing because the 200,000 mark of this weekly jobless claim has been breached time and time again. We went up to just over 260,000 a few weeks ago, but now we're hovering just over 200,000, which isn't too bad considering where it was above 500,000 and actually hovering around 1 million during the height of the pandemic. So it has come down considerably. And don't forget, this is a weekly jobless claim. So it's weekly, not monthly like the NFP. So just something else to keep in mind as well. Annual inflation did slow down to 8.2%. This was a stark contrast to European inflation inflation, which jumped to 10.7%. Last time around in their last reading, double figures for the first time ever. So Europe not really tackling the inflation, but America seems to be slowing down slightly, even though it is a record high at the moment. Well, it was a record high, 9.1%, 40 years we haven't seen those inflation records, but it has actually cooled down slightly. So is this a sign of things to come for America? Well, we've seen what the euro dollar has in store for the last 6 months. It has been progressively moving lower, and we've seen parity quite significantly. So as I said, we're going to jump on the charts in just a couple of minutes. Just want to go through a few figures that can affect the NFP as well. So let's just see what we're looking at the moment. So we've also got, as I said, annual inflation, as you can see here, dipping nicely for the third consecutive month, which is quite significant. So, you know, inflation in America can start slowing slightly, but will it get there in the end to this magical 2% that the Fed really wants to start pushing, even though they're hiking rates, quite significantly, and they will keep pushing. Had the Bank of England yesterday pushing a rate hike as well. We saw quite a detrimental move on cable for bulls especially. So let's just go through the last slide. Promise you it's the last one. Then we're going to jump straight on the charts. So retail sales did stall. The last time around, we had it at 0%, and expectations were at 0.2%. But the good thing is for retail sales, we haven't really hit negative territory like we did at the back end of 2021 and also the middle of this year as well. Falling into negative territory is very detrimental for the economy, because obviously retail sales are quite a big lifeline for the American economy. More people going out spending. But with these inflation measures really, really high, then you can imagine why it is still quite muted on that front. But we're just still looking to see what the outcomes are, where we're moving to next, and where this inflation measures will kick off as well. Private businesses actually were surprised in the last reading. They were up almost 300,000 in October, the most in 3 months, and the consensus was a lot lower than that. So ADP private jobs really starting to show that they could possibly be on the incline at the moment. But we've had quite a good reading on ADP figures, 500 to 400,000 in the last the last year or so. It's only been the last few months that we've had quite a detrimental reading on the ADP. So that's all from the slides. As I said, get straight into the charts at the moment. So like I said, let's look at gold first of all, because we've got a few people asking about it. So gold, as you can see, just want to put it on the daily chart because we've had such a detrimental downturn since the invasion or the conflict of Russia and Ukraine. This is why we saw this quite steady peak above 2,000 at the end of February, beginning of March. But since then, as you can see, very choppy risk aversion, and we've had not only one move, we've had correction after correction, as you can see here, moving higher and lower. This is on the daily chart, don't forget. These corrections were priced in because obviously we can't keep sinking and tanking lower and lower without some kind of correction. But more interestingly enough, if you just see here, we are now looking at a triple bottom, roughly around the 16-15 area. So at the moment, we are looking like prices will start correcting once again and start moving higher. But for me, if I just zoom into this particular area of interest, I'll just remove these particular lines so it's a little bit easier to see. The ones that I've just placed, that'll be quite helpful. What we're seeing here, and a lot of economists that I've been speaking to, is now we're ranging in this kind of $100 to $110 barrier. So we're expecting another leg higher at the moment, but we're just looking for breakages in this channel. So at the moment, we're just looking at this triple bottom, nicely laid out here. Very comforting to know that we do have support in the market for gold. But as you can see, we're having another leg higher at the moment. We've already moved up by nearly $30 today. So this is giving us quite an impetus that gold could start pushing higher, especially if we get a bad NFP reading, which we are expecting actually. The consensus is roughly about 200,000, but if it comes in below that, we are looking for a bit of a surge on gold. How much of a surge we're looking at? Well, at the moment, if it's only 70 more pips until we get to that particular area where we have possible resistance at the last double top that we saw, which wasn't so long ago neither. We are seeing that prices are now moving this was only at the beginning of October, the 5th. So roughly about a month. So it's not really moved too far in that kind of range. We're looking at gold now. Leo, thank you for your comments. We're going to move on to euro dollar as well shortly. But gold at the moment for me, it's ranging in this kind of environment. We're seeing this nice triple bottom being laid out in the meantime. So the 1615 mark is quite a good support at the moment. And if you're looking to set your bets and looking to, bids and looking to sell off, we're just waiting to see the next signal. Looking on the RSI as well, we're just seeing that this is not giving us many divergences to give us another signal to the upside. But if we break through this particular area, then we can easily start looking at the 1800 handle possibly by the end of the month. It could take quite a couple of weeks to do that because gold is very, very choppy at the moment. As you can see here, with the previous corrections that we've seen, we've dropped $200, then we've moved up $80, then we've dropped again by nearly $200, moved up $80, $200 drop. So this is playing into a lot of good trends, economist trends hands, because if we can see these very, very obvious trends in the market, we can, capitalize and make some profits as well. So we've moved up to this 80, just over $100 at the moment. But the significant part about this consolidation now is we've seen firm support here. We weren't seeing any support. It was downturn correction, downturn correction, downturn correction. Now downturn again, however, support, slight consolidation, but support. So we're seeing now where the next area is, and it could be very exciting for a lot of traders in general, bulls and bears, because if we get a break at this triple bottom, then we can easily head down to 1600 within a few hours. It won't really take too long to get back to that stage. So Leo, thanks for that. Nikhil, thank you for your comments as well. We're just going to go on to euro dollar because, more interestingly enough, we've pushed away once again from parity quite significantly. We broke it in the back end of October, so not so long ago. However, since then, as you can see, a major move to the downside. And with the Fed's comments, which is what this big spike is of raising rates once again, it seems that a lot of investors are taking note of this. They're seeing a strong dollar in the near term, at least, because, as I said, European inflation, is really, really starting to weigh down on not only Europe, but the countries that import and export from them as well. European inflation is 10.7% at the moment. It really is pushing towards not only record highs, which it is at the moment, but even further. And the Bank of England chair did say yesterday that Britain is in for its longest recession in a century. So not a good sign at the moment for not only the pound, but for Europe in general. So what are we looking at with Europe? So the euro at the moment, well, for me, we're just seeing now, we're not really going to test parity anytime soon. I don't believe the market will start moving higher all the way to this. I believe that we could see possibly, as you can see here, a move downwards, slight correction, and then another move down. It's moving in tandem, basically. We're in another correction at the moment. So we're believing that once we hit a bit of a resistance area, roughly about the middle of the 98-cent mark, we're going to have possibly another move lower to test these recent bottoms. So a good sell position for myself, it would be roughly about here. But obviously, if you put pending orders in, these are going to help you as well in that sense. But obviously, as I said, as a disclaimer goes, this is my technical analysis and fundamental analysis. So please let me know what you're trading on. Let me know your thoughts as well. As I said, we've got a live chat open, and Daniel is going to join us shortly in what is going to be quite a good session, because we're going to see what he has to say for the markets coming out. So I just want to touch on cable as well. If you've got no other questions about gold or euro, please let me know. If you want to look at any other assets, I've just opened a basket of the main competitors of the dollar, and we're just going to go through them quickly before the NFP begins, roughly in about 15 minutes. But Daniel's going to join us again shortly to give us his intake as well. But cable, on the other hand, when we saw the Bank of England yesterday put out their rate hike, you can see the detrimental downturn of price action here, going over 200 pips in one trading session, which is quite significant, because we are seeing not only a move to the downside, but we're also seeing what we can look at in the near term as well. So as I said, 250 pips for one reading on a fundamental analysis news event is a very big move. So no confidence at all for a lot of economists in the pound. And obviously with the state of the Conservative Party at the moment, well, the government really being in power for 12 years, but really seeing quite a detrimental downturn in cable and in the pound, it's looking likely there'll be a general election, possibly in the early part of 2023, and a new government, most probably Labour, will be in power by then. But, you know, all good things come to an end. Labour were in power from 97 roughly up until 2010, I believe. So 12, 13 years. And then we had the Conservatives in for 12 years. So you can see this swing in public vote and popular opinion that there could be time for a change in this parliament. So this could affect cable even further. So keep an eye on that as well as we go into 2023. Really, really big moves there. Just want to look on the Dow as well. We've got a lot of traders trading the Dow at the moment. I just want to pull this back to a daily chart because I just want to show you the choppy price action that we've seen from the beginning of the year. So what a year the Dow has had. We've seen these kind of record highs above 36,000, and we've now seen it collapse pretty much below 30,000. At the moment, trading just over 32,000. So it does have a lot more to go, but we're obviously looking at this nice V-shaped recovery at the moment for the Dow. It has broken past the previous resistance areas. So we're just looking now to see if it's going to start moving, possibly just over another 100 or so points in that direction. And then we'll see if that's going to have any bearing, or 1,000 points, sorry, then it's going to have any bearing on this V-shaped recovery, and if we can start looking at other trends in the market. So this is what we're really looking at today. We want to focus more on giving our traders and our potential traders more of an education into how to read the charts, how the fundamental news, such as the NFP, could affect the dollar, gold, oil going forward, and just what is in store for 2023. Obviously, we're coming to the back end now of the fourth quarter. We're in started November. Obviously, November, December will come and go pretty quick, and we're just looking to see what the next move is there. US index as well. We did see again this 20-year high on the US index. Try and put it on the monthly chart here. Trying to expand. Don't think my platform is big enough to show you the whole data, but this is going back to 2002, and we've seen another move to the upside. But let's just bring it back on the daily chart. We are in for more of a correction now. So we're going through a slight correction. As you can see here, there is this kind of bearish channel at the moment. But what we're most significantly seeing is possibly another bit of resistance here. So what we're looking at the moment is possibly another slight leg to the upside, possibly around the $113 area. And we're looking now to see if we're going to cap that $114, because this was the 20-year high, the 2002 high that we didn't see for so long. But we're in a slight bearish channel now. We could see prices start moving lower. But this for me is a very good resistance area, roughly just over the $113 mark. If that gets broken, then we can see another test at these fresh highs. However, the US index is very precarious. You know, it's focusing on monetary policy, fiscal policy, job numbers created, how it's going to fare against the euro as well, its main competitor. And obviously the US index makes up, the euro makes up 60% of the US index as well. So we're just seeing now if that's going to have any effect on anything going forward as well. But keep your questions coming. As I said, Daniel will be joining us soon. So we're just waiting to see what the next movement is in the market for the NFP. More interesting enough, just want to look on the CAD or the loonie at the moment, because there is actually Canadian unemployment rates and average hourly earnings and full-time employment rates as well. So when there is Canadian news at the same time as the dollar news, you're very welcome, by the way. Thank you very much, Leo, for your questions. Keep them coming if you need anything else. But when there is Canadian news as well as the NFP, then we do see more of a move and a shake-up in the loonie, in the dollar CAD. So we are seeing now possibly the dollar CAD coming through a V-shaped recovery to the downside after what has been quite a traumatic period for Canada. Obviously, it is still quite an oil commodity currency, but we are seeing moves in the market. But if you look on the daily chart at the moment, we're seeing now all this big consolidation. Just zoom in so it's a little bit easy to see. Very harsh consolidation from possibly the last move up to the to the upside, which was at the end of September. So this 2-month consolidation period we're seeing here. A lot of economists are waiting for this break. So we're waiting now for this 135 psychological level to break to see if we're going to start moving lower. But this is very, very good because with trends in the market, like I've shown you for all of the asset classes that we've seen today, trends can be very, very favorable to the investor because you're getting quite a lot of information in that respect as well. So it's very, very important that if we do see some trends emerging, we can jump on them and really start making some good profits in our portfolio as well. So just another quick look. We didn't touch on the dollar yen yet. So the dollar yen has had quite a choppy feed. I mean, look at this big drop that we saw not so long ago, over, let's see, over 500 pips, quite astonishing, really. And this was only in a few trading sessions. So just pull it back to the daily chart. What I've just shown you on here, again, we've had a move to the upside correction, upside, and then we had a consolidation to the upside. But then, as you can see, we've had another move higher. And guess what we're waiting for now? Another correction. So it is kind of priced in at the moment, but this correction is basically a little bit more, it's got a bit more juice in it than these other corrections here. So we are seeing a lot more of a choppy market at the moment, a few big spikes in these daily candles as well, rather than here. These daily candles are very short-lived, nothing much happening with them. But as you can see here, quite a lot of information coming out of the market in these choppy scenarios here. So just 8 minutes until the NFP. 7 minutes now. So as I said, let me know your thoughts. Let me know what you're trading on, what you're looking to trade on, not only for now, but in the next 2 months until the end of the year. And let me know how you think 2023 is going to be displayed. Let me know what you think is going to happen to the major currencies, the euro, the dollar, the US index, gold, oil, all these things. Oil is supposedly going to be hitting $100 a barrel by the end of the year. It's at roughly about $90 at the moment. We are seeing possibly this oil supply and gas supply being tightened. And obviously by the end of the year, there's going to be a lot less Russian oil and gas in the world. So that means OPEC have to start really opening up. You've got the UAE governments that said they're going to start pushing more supply to European countries, but will that happen anytime soon? And what will be the effects of that if it doesn't happen when we can? Obviously, America said they're going to supply some more oil and gas to Europe, but it's going to be a lot more difficult than just getting it from Russia, who are next door to Europe as well. So all these factors, we're going to start looking at how they're going to be combined and where they're going to be in the near future as well. Okay, so as I said, anything you want to ask me, let me know, as we've got just under 5 minutes before the NFP goes live. And just an update now for the NFP for the consensus. So 263 jobs were added last time around. We're looking roughly about 200,000 this time around. But as I said, 200,000 before the pandemic was a very steady and reasonable number for the American market. So we're just seeing now what is in store for that and what can be possibly heightened. So just got a couple more questions about the euro dollar before we begin this NFP. So as I said, if we put it back on the daily chart, we are looking possibly very, very consolidated at the moment, but we could see another move to the upside. Looking very, very stable at the moment. And we're just seeing now that slight move to the upside, but we are expecting another correction lower. So, and the euro dollar and pound dollar seem to be always usually moving in tandem. However, with this Bank of England hike yesterday, which was quite surprising because only 25 basis points were supposed to be priced in, but they went 75 basis points, which is quite aggressive, a little bit like the American market as well when they hike the rate. So we're just looking to see where the next movement is for these currency pairs. So let's just have a look at an overall picture. So I'm going to start just moving some of these. So I just want to make sure our chart. Just want to make sure that we are very clear at what we're looking at the moment. As I said, for me, there is a good resistance area, roughly about the mid 98 cent area. So we'll see if that plays out as well when the NFP is released. Gold as well. Just zoom out. We are looking now at this V-shaped recovery. However, this was a bit of a false spike at that time when the Fed did release its minutes. So we are seeing now possibly a bit of resistance at the last possible double top, roughly about the 1660 area. So that would be quite significant as well. Dollar index, for me, as I said, if we break out of this particular channel, we are looking to see a bit of resistance at 113.20 approximately. If we break out, then we could hit 114 by the end of the day. It could be very, very beneficial. Dollar CAD, like I said, we're moving in the downward area now to see if we're going to complete this V-shaped recovery to the downside. And the Dow, again, we are seeing that we are trading over 32,000. So this can be very significant as well, if we can stay above that. Gold, on the other hand, like I said, 1660 is what I'll be looking at. If we start falling lower, then the previous, I'll just bring gold up one more time, the previous low, like I said, we saw this nice double bottom forming. I don't believe it's going to get back down to 1615 by the end of today's trading, but stranger things have happened as we go into 3 minutes before the start of the NFP. So I'll just see what the comings and goings are at the moment. So like I said, nothing really has moved in the sense that we're looking at the moment on the unemployment rate for Canada and the US. And we're still looking at roughly about 200,000 jobs being added for the NFP. So just a couple of minutes to go. As I said, let me know what you're trading on and what you're thinking about as we go into not only looking at gold and euro dollar, but also all the other major basket of currencies as well. So let me know where maybe you're putting some targets for yourself. Maybe you're looking at different currency pairs or different asset classes. Please let me know. Obviously, gold and euro dollar are obviously, and the Dow are the big ones a lot of our traders are looking at the moment. And Daniel has just joined me, so I'll just put my headphones on. So just allow him in. Hi, Daniel, can you hear me?
Hey, sorry, is my audio working finally?
Yes, I can hear you very well. Thanks a lot.
Oh yeah, thanks. Sorry, I've been a bit busy today.
No, you joined us just before the NFP is about to be released. I've just been taking our viewers through a few of the targets that we're looking at the moment.
Oh, cool.
Euro dollar, just a quick brief on that. It's fallen away from parity quite significantly. Do you see by the end of the year possibly another test at parity, or you think it's just where it's going to be trading for a while?
Oh, most likely it probably there's the kind of idea that it might go further down as the dollar gets a little bit stronger again, because the impending potential recession and how things fall out in Europe, and whether the ECB is going to actually continue tightening as much as the Fed will. But then it might still stick in its current range until getting into December, because in December, well, we still have about a month. It could be in a month, but getting into December, people start getting a little bit more relaxed.
Yeah, exactly. So we've got the numbers just coming in now for the NFP. So 261,000 jobs have been added. So not a bad reading. Yeah, since it was roughly about 200,000, was it the consensus this time around? Something like
there's
that?
also a really tight range. It was like from 175 to 225. So it's well above what pretty much anyone was expecting. I guess it'd be a big market reaction there.
Yeah, exactly. So euro dollar's already moved a few pips to the downside. So I guess with this reading, you could say it's another positive step in the right direction for the American economy to, well,
Yeah,
a recovering economy, hopefully.
yeah. You're normally about 200,000, 220,000 is like the top end of a normal NFP. So if you're getting above that, it still means that adding more jobs than you would be normally expecting. So generally speaking, still part of the recovery, still getting more jobs done.
Exactly. I think we spoke about this before, whereas before the pandemic, 200,000-ish jobs being added on a monthly
Hmm.
basis was reasonable. It wasn't like it was a negative reaction.
Yeah, yeah. I think it gives more room to the Fed to keep hiking. The
Mm.
one important thing to check is to see whether that birth death adjustment happened again. Let me see, where is it? Oh, the unemployment rate went up.
Yeah, 3.7% as well. It's a bit of a surprise.
Right. In the labor force participation rate only went up by a one decimal. Huh. That's a little bit interesting.
Mm.
Unemployment to ratio, where is the birth death adjustment as usual? Keep hiding all the data. Average hourly earnings looks kind of good. It's still not out yet. It'd be good to also check to see what the revisions were for last year. I mean, last month.
Last time around.
Yeah.
Uh, so, I mean, we've had like a 20-30 pip move on the euro dollar. It seems a little bit flat now. So, I mean, it was positive for the American economy. However, not really too much of juice, let's say, to put into the NFP. It's not really a crazy, surprising number.
Yeah, I think there's also a little bit of offset because the unemployment rate goes up, but the job numbers come in higher than expected, but also you get the jump up in the unemployment rate. So that's of course the thing that usually happens with NFP, where you get a big move initially and then it starts fading. That's why I was also trying to look into see
Of
whether you could
course.
expect that. But I guess that might explain why there is a move in the market, but it's not like terribly huge, I guess.
It's not, yeah. I mean, gold has moved a few dollars, but it's already like
Mm.
pretty much reversed the whole way.
Yeah.
I just wanted to touch upon, I was telling the viewers before, American inflation data versus European inflation data. America seems to be easing off a little bit in the last couple of readings. It's coming down towards 8%. However, Europe is still going on this record high of, it's at 10.7%, I believe now. So with that being said, you could probably say that we expect the American economy into 2023 to have possibly a better start than Europe, especially after the Bank of England governor yesterday said that the Britain itself, as well as maybe some other economies, are going into the worst recession in over a century, or they're heading into a recession.
Yeah, I mean, probably the UK is a bit of a bellwether for the rest of Europe because they're subject to pretty much the same conditions as Europe is.
Mhm.
But the thing I always like about Bailey's a little bit more outspoken. He goes and says stuff that other central bankers might not be
Sure.
up for saying. So it might be just he's being a little bit more forward, and then we might get the same commentary out of the ECB. The
Yeah.
thing would be, of course, is that since inflation in the eurozone is continuing to go up and inflation in the United States is sort of plateauing, that would
Mhm.
mean that the ECB would likely hike more,
Mm.
which could give the euro a bit more strength. But also, but if they go into a recession, then the ECB is kind of going to get really tied up, and they won't be able to raise as much as the Fed will. And so, that could also push the euro down a little bit. I think the euro probably reacted downward since Powell
It,
said he
it,
was gonna.
Yeah, it did. Yeah, it did exactly. And obviously, cable took a bit of a fall yesterday as well, with the going over 100 pips to the downside. So,
Yeah.
it doesn't look like there's a break in the dark clouds above Europe anytime soon. America just seems to have a little bit of ray of sunshine. If we're using this philosophy of weather terminology, we're just seeing now basically a slight rainbow for the American market, but for Europe, especially. There'll be a lot less Russian oil and gas by the end of the year in Europe and Britain as well. So this is another factor that Europe has to account for, especially with the winter months coming upon us soon.
Yeah, Europe there has a lot more to worry about when it comes to the war. But
Yeah.
in short term, I guess to be a little bit more positive, the United States has two kind of big major risk events that could move the dollar and therefore all the other currency pairs associated with it. You have the election on Tuesday, the midterms
The
election, and
midterms,
then
yeah.
and then on Thursday is the inflation, the latest inflation from the United States. And so since the Fed was quite recently, the inflation probably won't have as much of an effect, I guess, but still could be a big mover. And also
Yeah,
that could get the euro back in line.
it could do. Yeah, I'm just looking at the expectations for inflation. It's supposed to be roughly about the same, nothing too surprising, but obviously, it is just the consensus and the forecast, so it could be in store for a bit of a surprise. But going from 9.1%, the highest in 40 years, just a few months ago, we're down to 8.2 now. So would you say the Fed hiking is working, or do they have a long way to go? I mean, they were talking about 2% would be ideal, but I don't think it's going to happen anytime soon.
Yeah, I mean there's a lot of academic debate about how much of an impact the policy rate has and when it starts having an effect, because there's some people saying that between raising rates and when you get the effect on the economy can have to be up to 2 years later. One of the things to point out though is that the Fed has been raising rates, and also the core interest rate's been core interest rate, sorry, the core inflation rate has been going up along with it. So
yeah,
we get the drop in the headline inflation rate, which also coincides with a drop in the prices of oil. So that might be more of an explanation for what's been going on with inflation. But for next month, the one that's coming up now, the core inflation is expected to come down just a little bit. So there might be the Fed is finally having an impact. But then also we have the prices of oil's gone up. I haven't checked it. It was getting close to $100 a barrel, I think it was earlier today. So that might push the headline inflation up again for November. So that'd be the data that would be getting out in December, I think.
But I mean,
it's Friday. My brain isn't exactly fully functional.
No, it's fine. I just wanted to touch upon, because you mentioned oil. I mean, there was an expectation it was going to start trading at $100 a barrel sometime soon, especially before the end of the year. But it was quite predictable in that price move, especially with Russian oil being pretty much drying up for most of 2023 for Europe and America. And we've had OPEC saying that they might have to tighten the supply. They can't keep producing, so much oil in the world to make up for Russian oil, basically. So there was an inkling that there was going to be this $100 a barrel before we knew it again.
Yeah, well, also there's another thing that came out. It's been going on. There's been these rumors out of China that they're moving towards reopening. Well, technically, I guess you can say they've been locked down, but to move away from zero COVID. And then last night we had more rumors that they would be doing it sooner than anticipated. And so if China were to make that move, they would most likely start consuming more oil, and that could push the price of oil up. So we have OPEC cutting production, and then suddenly China coming in and starting to buy right in the middle of winter, when you get the increased demand out of Europe, and you also get increased demand out of the United States for winter heating. And then there's the other problem with the refining issue, that the United States has been losing refining capacity, and so right now the Northeast, which uses diesel fuel for heating in a large portion, they're starting to see shortage. Well, not shortages, but the amount of supply that they have is starting to go down. So that could also lead to another price pinch, particularly on the refining side, because now the United States imports refined oil. And so that is a large portion of that also comes from Europe. So they kind of getting the oil market a little bit uneven, I guess would be a way to say it.
Sure. Yeah, no, it makes sense. I mean, because as I said, as we go into the end of the year as well, with the winter months, there'll be a lot more gas needed for a lot of the northern hemisphere, at least. So we'll see if that's going to affect supply and demand as well. One other thing, Dan, I just want to touch upon what I've got you here. Just taking the viewers through a few of the slides before you came on air, and with the NFP, I've just got the NFP figures here. I hope you can see my screen for the last year or so. Because the NFP is taken a month before, we've got Thanksgiving coming up in America soon, and obviously the Christmas months. Are we expecting, obviously that will be January's data, I guess, for December. So if I've got my if my brain's engaged. So would you expect January typically to have a jump in jobs added due to the seasonality of the seasonality coming up shortly?
Yeah, usually December and January, because it depends on some of the companies. They start hiring earlier, so they have the personnel,
Yeah,
and a lot of
exactly.
shopping happens also in November. But
Yeah,
from what I saw, Amazon is hiring the same amount of people as last year, if I remember correctly,
right,
and Walmart, I don't remember what Walmart did, and Target was also not hiring any increase. No, haven't heard any mention about them hiring more people for the holiday season than the prior year. So
right.
it might there probably might be an increase, but probably not as much as we might have expected, without the current scenario. Like the increase that you had last year might be bigger than the increase we had this year.
Yeah. Would you say it's because a lot more companies such as Target and Walmart are being a bit more precarious, they're a bit more worried about hiring too many because of the retail sales data? I just want to touch upon that as well because it was
Oh
muted
yeah,
in the last round. It was at zero. We didn't fall into negative territory like we did do a couple of times in the last year. But do you think a lot of these big companies are worried about people just because of inflation not going out and spending so much?
well, yeah, that seems to have been sort of the theme around Halloween. Is that also? I mean, you don't have the huge sales thing that you have normally with it was Black Friday. Sorry,
Right.
yeah, but you do also get a little bit of increase in discretionary spending around Halloween, and that really didn't manifest itself as much as expected. So that's sort of, I guess, leading a lot of these retailers to think, hey, you know what, maybe Black Friday isn't going to be as good as we might have expected, and so that might lead them to not be. Well, I guess also they're also going to look at Black Friday to see how their sales went then, and then see how much personnel they need for the holidays.
Yeah.
So that's the other thing.
Yeah, so it could be a little bit of a muted holiday season, would you say, in America compared to previous years, maybe even before
Yeah.
the pandemic? Actually, even during the pandemic, I think we had our first lockdown, well, stoppage of lockdown at the end of 2020 or something like
Right.
that. It kind of
Yeah.
everything opened up at the end of 2020, and there was a big push in the holiday season because it was like, freedom, everyone's out, and before they had another few lockdowns in 2021. So
Yeah.
this could
Finally, I
be
get
even
to
more.
spend.
Exactly, yeah. So this you could say this could be even more subdued than the last couple of years when we were in the pandemic. Obviously, now I think Joe Biden said recently the pandemic is over in America. They're just going to deal with it. So
Yeah.
it's kind of like even more subdued than what you say than we had in the pandemic for this
Yeah,
winter
probably
season.
because not only they have less money to spend, but they've also been running up credit card debt to compensate for that
Hmm.
recently. So with less, and also when you have higher interest rates, that also filters down to the amount of the credit that they pay on consumer credit for that sort of thing. So the people will probably be less willing to take out credit card debt if the interest rates on the credit cards are going to be more, or taking on any other kind of like short-term loan for Christmas spending might be
Hmm.
smaller, considering they might be paying up to twice or three times as much interest on the same loan. So it could be,
Exactly. And
yeah.
don't forget if and with the inflation problem that's happening not only in America but around the world, even in Europe where
Yeah.
we are, we've seen the prices of things going up. So maybe people will buy one thing instead of two or three things, for example, this year as well.
Yeah, just to be a little more efficient in the present shopping.
Exactly, exactly. Okay, great, Danny. I think we've covered all the bases there. So just have a brief look at post NFP data for some of the charts quickly. So we've had the euro dollar move roughly about 60 pips, but as you can see, I'll just make it a little bit more zoomed in. It's pretty much gone back to where
Yeah.
it has done for the last the last 30 minutes, 15 minutes, sorry, since we had the news break. So it's been a little bit subdued. I just touch upon gold as well. Gold is moving slightly higher at the moment, but again, I put this resistant point in at the moment because this is where we're seeing roughly slight resistance at the 1657, 1658 area. But again, this has only really moved $10, which isn't really something to sink our teeth into for the next direction for gold. So quite a subdued NFP. I just want to quickly take a look at the loonie dollar CAD because we did have some data there. I was looking, I'll put it on the daily charts, it's a little bit easy. No, it's probably, let's just go on the hourly chart, is a little bit easy to see. I was looking at this V-shaped recovery to the downside. Before the NFP started, we were roughly trading at this point, and now we've seen this V-shaped recovery that I'm kind of tracking at the moment back down to here, which is kind of working. But if we just take a look at the Canadian unemployment rate, that stayed the same. The same at 5.2%. There has been a little bit more of average hourly earnings increase at 5.5% for Canada. Would you say, the loonie is going to have a little bit of a tough year because it is a bit of an oil commodity as well, isn't it? Going into 2023, I think, is there going to be more demand from Canada for oil since we're seeing a lot less Russian oil for 2023? Do you think?
Well, Canada mostly is exporting to the United States, and the United States really didn't import all that much oil from Russia. So they're still building the port to export to Europe, but that isn't to be expected until about mid next year, if I remember correctly. Going off,
Right.
my brain is not particularly all that reliable. But so yeah, I mean, there'll probably be something in the future. But I think one of the things for the Canadian dollars that the BOC can be a little bit more can be less hawkish not to say dovish, but a little less hawkish than the Fed. One, because they get this influx of cash from oil, so Canada has a trade surplus, unlike the United States, which has a trade deficit. And so
Right.
also I think this data from Canada is a little bit different because their unemployment rate is a little bit higher. And so if they get better jobs data, that gives the Bank of Canada a little bit more room to start hiking a little bit more. But still, having the higher unemployment rate, and also having more cash floating around because of oil, probably the loonie will be a little bit under pressure. So like you point out there with the technicals, there's still more room to the downside. It's also sort of backed up with the fundamentals, I would say.
Yeah, definitely. Absolutely. I'm just basically going over a lot of the major economies, because every time we have the NFP, we look at the major economies to see how they're going to progress. But because we're coming to the end of the year now, 2023, obviously, as I said, we've got the midterms coming up. It won't be long before there'll be another presidential election. It'll be here before we know it.
Yeah.
So this could shake up the market even more, especially Donald Trump did say yesterday, I believe, that he will be standing again to try and be, the Republican candidate there. So, but there could be some strong opposition from his own party. So there's lots of things to take into account as we go into 2023. Obviously, we've got recession fears as well, like not only in Britain, but Europe. And I think America are supposedly going to avoid the recession, but you never know.
So it might be kind of a play with definitions there.
Exactly.
Yeah.
So we'll see what comes. Yeah,
I think December's Nonfarm Payrolls will probably be actually quite interesting as well, because that's closing out the year, and then we're going to have a lot more information to sink our teeth into and such.
Exactly, yeah. Like we touched upon as well, we've got Thanksgiving and Christmas coming up. It'll be interesting to see just how many jobs will be added and what this will mean for 2023 and beyond as well, because obviously with the inflation, record inflation at the moment, it'll be very detrimental for not only America but other economies if they can't really shake off this inflation and they keep raising rates and it doesn't work out. And where's plan B or plan C, or we probably run out of the alphabet with the plans.
Yes, the thing is, so far they've been raising rates, and inflation is keep going up at the same level. So at some point, something's going to have to happen.
Something's going to have to give. Exactly. Yeah. Okay, Daniel, that's great. Well, thanks for joining me on this NFP release. And
thanks for the invitation.
No problem at all. And we'll see you next time, and we'll see how it pans out for the next winter months.
Okay. Well, have a good weekend.
Thank you very much. And once again, thanks for joining us. Bye for now. Okay, so that was Daniel with his insight into what's happening in the markets. It's always good to get his opinion because he more or less has a technical look at what is happening in the market. And we look at obviously the fundamentals as well going into the new year and how it's going to be affected as well. So I'll be online for a little bit longer. If you've got any questions about any of the instruments that we looked at today or any of the readings for the NFP, please feel free to let me know on the chat and we'll go through it together. So just to recap on the basket of currencies that we looked at today. So we've got euro dollar moving roughly about 60 pips, but the body of the candle for the last 30 minutes is roughly 30 pips only. And that's pretty much the same feeling we're getting for most of the commodities. Gold is probably one of the only big not big movers, but movers that's gone into our, I'll just put it on the big screen for you so it's a little bit easy to see. And actually I need to share my screen because I'm talking, but I'm not really showing you what I'm looking at. So yeah, we're looking at now at the resistance zone, roughly at 1657, 1658 mark on the last top that we saw here. This is a little bit of a false break for me, because we're just seeing now that it is just looking a little bit too much to the upside. So we're now looking to see what's going to happen. Leo's asked me about Euro Kiwi. Let's have a look at that, see how that's performed. And we'll just go into... So Euro Kiwi, if we're just looking at the daily chart now, we were looking at Kiwi pairs and Aussie pairs the last few days, because we had the Reserve Bank of Australia and the Reserve Bank of New Zealand giving their cash rates as well in the recently. We're looking now that, for me, again, with every big bull run, we have a slight consolidation that we've seen here, and now we're looking to the downside. So we're really starting pushing, and we're really looking to start breaking down to have that V-shaped recovery. So not really too much in divergences at the moment. So roughly just over 75 pips. Sorry, 750 pips. So we're just looking now at what can be the next move for the Kiwi. Euro Kiwi, is that something you're trading on, Leo? Please let me know. We can go into a more in-depth look. Obviously, the NFP does not really affect too much of the pairs that do not involve the dollar. So Euro Kiwi would just be a slight move that we saw recently. We've moved a little bit during the news event, but as you can see here, Euro Kiwi is very, very volatile, with these candlesticks moving quite significantly. So the NFP won't really make much of a difference in that respect. But feel free to give me your email address, Leo, if you want to speak any more about certain instruments. We can connect, we can do one-to-one sessions, and we'll be able to see what you're trading on as well. And that goes for all of our clients and all of our viewers. Let us know what you're trading on. Send me your email addresses, and we'll be able to see what is in store for the markets for the rest of the year and for the next few months as well. So this is very, very interesting as we go on and on as well. So thank you very much for joining me today. As I said, I'll be able to give you any other information via email, and we can connect one-to-one on the chat if you want that. And obviously going forward, please let me know. So as I said, thank you very much. I've been David Kinley. I'm the market analyst at Orbex, and if you need anything, please feel free to contact us, and I'll be able to connect with you with your details and be on board as well. So once again, thank you very much, and we'll speak again next time around for the next NFP.